give a little bit of an explanation of post-tax money and pre-tax money. So for example, if you don't have a property company, for example, a property business that is set up on a limited company structure or limited liability company, wherever you are in the world, some countries are going to use limited companies, some countries are going to use limited liability companies, limited partnership, whatever there is. But we're looking at business structures. The advantage of the business structures for kind of scalability is this, that you are not relying on a wage to build wealth. So a wage means you work for somebody else and then you have post-tax money. So you work hard and you make, let's say, £2,000 or $2,000, and then you have your deductions, which is tax, national insurance, wherever you are in the world, different taxes there. And then you're going to have the post-tax money. And then you're going to utilize the post-tax money to invest and generate some returns. Now, when you use limited company structures or limited liability partnerships or whichever there is, company structures, right? Business structures, you utilize a lot of pre-tax money. So instead of going paying a bunch of tax on the income that the company generates, you can actually utilize those funds before paying tax to then invest in other areas. So you leverage it. Okay, I'll give an example. Imagine if you have an iPhone like I do, an iPhone, I think, let's say if it costs around 1,000, I don't know, 500 pounds or euros or dollars. If you work for a wage to buy that phone, you most likely will have to earn far more than the 1,500, 1,200, whatever the phone costs. And the reason is you have to earn more, you pay your taxes, and then you go, after the deductions, you take the funds, which is saved money, and then you go and buy a phone. Now, when you utilize company structures, you buy the same phone with the same amount of income that the business has generated. For example, if the phone costs 1,500, the company, the business will generate 1,500 in income, and then you buy the phone for 1,500. Whereas if you work for a wage, you're probably going to have to earn 2,500 or 3,000, depending on your earnings and your tax deductions, to then be left with the 1,500 to then go and buy a phone. So a lot of structures there's a lot of advantages of using advanced ways of not just generating cash flow, but also advanced ways of retaining money and keeping money within you so you can go and reinvest, so you can scale up, okay? So just be very careful there with the financial trap of buying first house. I know a lot of people have this belief, oh, I need to work and buy my house, buy my own house. First of all, if the property is not fully paid, you don't own it. The bank still owns it. You just pay a mortgage, which is pretty much the right to occupy the asset, but it's not yours. It's the bank's money. Now, if you're going to have, for example, let's say if you're going to invest or if you're going to put a deposit of 100,000, whether it's British pounds, US dollars, euros, or whatever the currency, instead of parking 100,000 into a place that's going to become a liability for you, right? What you can do is to utilize the same 100,000 through some advanced strategies that we do through the Daddy Boss system, and you can perhaps end up controlling up to about 10 properties with the same 100, right? That's right. The numbers are right. You can utilize the same 100,000 instead of buying one or putting a deposit in one for you to live in, which is going to become a liability, not an asset. You can then utilize the same 100,000 and potentially control up to about 10 properties. And each of those properties will generate cash flow and the equity for you. So instead of parking that amount of cash into one place, which is not going to generate much cash, if any at all, because you own a home, and perhaps a little bit of equity in there, but you can't really do anything with the equity because you're going to be living in the house. So it's kind of like limited in there. You can utilize the same amount of capital, let's say 100, and control up to 10 properties, and each of them generating a few thousand of net profit because of a strategic way of doing that. And then you just do the math, right? Let's say if you have 10 properties generating 2,000 a month, you then have what? You've got a good number there. So you're talking about 20,000 of net cash profit every single month instead of none, right? I hope this is making sense. It's a little bit advanced for most people, but that's literally pretty much how I do it. And of course, you still have the equity on top of that, so you still build the wealth. along those lines. Okay, so I hope it makes sense what I shared here, but just be mindful of that. And the key, I would like, one of the perhaps giveaway I'd like to leave you with here today when you're watching these videos, is start questioning the beliefs that you were taught to be true from childhood. When it comes to money, when it comes to wealth creation, when it comes to generating cash flow, when it comes to working for somebody else, when it comes to building a life in your terms. Because it's a lot simpler than I have been taught when I was a child, growing up in Brazil, a loving family, but a lot of limiting beliefs about what's possible. And it's a lot simpler and is actually really, really enjoyable. And you get to a certain level, just like us entrepreneurs do, right? We think about how do we create value? How do we create value to the marketplace? And the returns that we have financially is in direct proportion with the value we create to the marketplace. Financial returns are in direct proportion to the value we create to the marketplace. If you want more returns or more money, create more value, reach more people, create more value to more families, more individuals around the world. And that's how we do it. And property is just a vehicle, like any other business or any other class of investments. Is just a vehicle. So utilize property as a vehicle to create value for others and therefore for yourself. I hope you found value in this video, and always, always, always challenge the status quo. Always question, how can I do this better? Why things need to be done in the way that I have been taught needs to be done, okay? And always question these things, because if you don't, your results are just going to be in line with those around you. And your results are always going to be in line with those of you thinking. But once we start changing the way we think, just like I have explained about cash flow and equity from assets that you don't even own or even before you buy them, right? Once you become aware of something else, once you become aware of how to do things in a certain way, then you're going to act in a certain way, and then your results are going to change. It's actually very, very simple. So I hope you found value in it, and keep pushing forward, keep moving forward, and always challenge the status quo.